Sanlam Private Investments manages assets on behalf of high net worth private individuals and their families in South Africa, the UK, Western Europe and Australia. 400 people across 23 international offices manage 120 billion rand in assets under management. Alwyn van der Merwe is Director of Investments at Sanlam Private Investments. He joins us from Cape Town. Hello, Alwyn.
Good afternoon, Erika.
Alwyn, we've just been saying with our previous guests, certainly tricky markets, and I think a point that you've made is that this is very much sort of a macro-themed market. You've got risk on, and then everyone's plowing into emerging markets, and then the fear, and then selling off emerging markets. Sorry, the other way around, risk off. And it makes it difficult for a stock picker or a value investor to do the right thing.
Yes, I think the dominant factor driving the market, as you correctly say, are the micro environment. And the micro environment, quite frankly, is being dominated from events that we experience overseas. And if you look at the numbers that are being currently released from overseas economies, Erika, you can clearly see that from the economic momentum is certainly quite disappointing. If you look at the US, the PMI numbers that were released there yesterday, I think came out below 50. Europe was still exceptionally weak, and I think the one thing that worried me about Europe was that the weakness actually started to escalate into the core areas of Europe as well. And even in the East, in China, the PMI number is still around about 50, but in other economies in the East, which actually provided quite decent growth, we saw some slowdown there. So if you actually look at the economic trend, and if you believe that there's a correlation between the economic trend and, of course, earnings, there should be some concern with investors. So if you don't get a reprieve or a recovery in economic activity, then quite frankly investors are looking at economic authorities to provide some relief. And we didn't get much relief the way I saw it yesterday following the Fed's meeting, and it seems to me the way that the market has responded to what Mario Draghi had to say this afternoon there was also a bit of a disappointment there, and I think it came on the back of some elevated expectations after Draghi's, let's call it, promises that he made last Thursday.
Hi, Alwyn, it's Warren here. I just wanted to ask you, just on the back of that, are we expecting too much from the central bankers at this point? We kind of discussed the problem earlier with the previous guest, and I kind of get the sense that the markets are looking too much to the central bankers and not enough to the politicians to try and sort out the mess in Europe, and we just seem to be going around in circles and kicking the can. So what's your thoughts on that?
Well, I think your latter comment of kicking the can, of course, is true. I think we need a joint effort from the politicians and the economic authorities. But even having said that, you know, all they can do is they can only create an environment and introduce measures that will create conditions for the economy to recover. But we sit with a problem, a deep-rooted problem, that even though they might create that environment and that they might stimulate the economy, it's not going to be a short-term solution. And those economies that are under pressure, particularly those economies with serious debt problems, it will take time, and we're talking years here for them, I think, to resolve those issues. In the meantime, I think we as the asset management industry and economists, we must prepare ourselves that many of those economies, their growth rates that they will record, in all likelihood are going to be lower than the longer term trend that we got used to over the last 20-25 years.
So Alwyn, where are you finding shelter? Because in the end we're assuming that the politicians will do the right thing, but sometimes there's a lot of brinkmanship involved in this, and investors are hurt in the process.
Yes, of course they will try to exhaust all the possible solutions until they come to the right solution and take the right decisions. But Erika, it's a very tough question, the whole thing of, you know, where do you find cover? Now that in itself is quite a defensive question. So when you try to find cover, then, you know, I suppose then you shouldn't look at risky assets to try and find cover. However, if you look at the investment prospects of the two asset classes that would generally provide cover, or where investors think they can get cover, is cash on the one hand, and of course bonds, government bonds on the other hand. And if you look at government bonds globally, we're talking about yields of 1.5%. Now, to my mind, if you buy a government bond and hold it for 10 years and you're only going to get 1.5%, that is not really a solution, is it? And then if you look at cash as well, you know, although cash provides safety and cash provides optionality, the yield that it provides, it's simply just not attractive. Locally, of course, the yields both on the government bond side as well as on the cash side is more attractive than what we can find overseas. But it's still, to my mind, it doesn't provide a long-term solution. So that leaves you with a risky option. But if you take a risky option, in my mind, there's then the whole issue about your term of investment comes into play. Because as the previous speaker, I just picked up the last part, what she said is, you know, it's impossible to predict what is going to happen in the next 3 months, 6 months, 12 months, in fact. But if you buy a quality counter with a yield of 4% and you hold it for 10 years, I guess you will, or my view is that you will certainly make more money in that compared to the other two asset classes that I've spoken about.
Alwyn, just to then lead that into where you're seeing value in the local market, because this is the one thing that's of concern to many investors that might feel that certain sectors of our equity market are looking overvalued. If things do get worse in Europe, I would expect that more money would come shunting out of Europe into emerging markets, and that would affect not only our bonds but also our equity market. Do you believe that that can still happen? And attached to that is, where are you seeing value in the markets, in the local market at the moment?
Yeah, maybe I should try and answer the macro question first. You know, I think one of the reasons why we saw global investors buying our equities, in fact, they were net buyers of our equities in the second quarter, and of course they were significant net buyers of our bonds throughout the year, is because one of the major investment themes globally, of course, is yield. And you could find yield in South Africa, and that supported the currency, and it certainly supported some sectors within our equity market. The retail sector in particular, I think, was actively supported by overseas investors. But I personally don't think that is necessarily a sustainable solution. At some point, and it's very tough to predict when it will happen, the whole search for yield will come to an end. And I think a lot of the money that came into the South African bond and equity market might well try and find another home. That would normally, in a normal kind of cycle, and I don't think we have a normal cycle, but normally that will happen when interest rates start to normalize. And I think that holds a major risk for investments in South Africa, because if that happens, of course, it will have an impact on the currency. And therefore, you know, it will also probably happen at a time where, you know, commodity prices, in my mind, can also come under pressure, and you know, I think it will be negative for South African assets in general. If you look at our own market at the moment, I think it's extremely tough. I mean, there are certain pockets where you can say it is certainly still a stock picker's market, but if you look at the market in general, and I've got to emphasize it is in general here, what you've generally found is that as a result of the negative macro news flow, investors did not want to invest in cyclical shares, and there, of course, we predominantly talk about mining and resources counters.
Alwyn,
and what we found
I have to interrupt you. You've got us
share prices are coming under pressure.
Hooks here, Alwyn. Yeah. You've got us here on tenterhooks, and we need to finish off. So if you could just give us in one final sentence what you do with your money.
You know, so what we do with money is we are slowly starting to put money into those shares that show value, but we know that in the short term we take risk. On the other hand, we try to buy shares, and there are those in our market where the earnings, I think, will come through, and where the multiples actually justify an investment in those sectors. So there are certain specific stocks that you can pick in our market still.
Good talking to Alwyn. Thank you. Alwyn van der Merwe, Director of Investments at Sanlam Private Investments, and Warren Dick from Investors Monthly. Thanks to you too.